Good evening, everyone. This is Henry Gambell with SimplerOptions.com, and in tonight's free video I wanted to share 3 different ways that you can look at positive time decay trades as we get into this Friday. So, when you think about options decay, of course, if you're a purchaser of calls or puts, that's something that will work directly against you. But during the week of monthly expiration, and especially after what we saw last week where you had that sharp drop on Thursday, begin to stabilize on Friday, it's really just the perfect environment to see a rebound off the lows and then to chop for the next 3 days. So, in my mind, I look at the bounce that we saw through Monday and Tuesday and started thinking, okay, this is a spot where I want to start feathering into an idea of the S&P trading sideways or potentially lower. One of my favorite ways to do that is through something like an unbalanced butterfly. So we're looking where the SPX closed today at 2464 and giving ourselves about 10 points of uproom by initiating the short strike of this butterfly against 2475. So the whole concept with this type of a butterfly is that you structure the quantity of these so that the credit taken in from the bulk of your short contracts, the credit received in that will offset both of the contracts that you buy. So in a situation like that, and generating a credit in the overall trade, you have no risk to the downside. So if the S&Ps do roll over or trade lower at all, then this will be a very easy trade to manage. If it decides it wants to inch up a 10-point move, that is actually where we will have the peak of our profit, just like you would structure a standard butterfly. And then of course if it explodes higher, we always know what we have at risk. So that's one way to do it, and of course the ultimate goal with something like that is to make sure that you're generating positive time decay over the course of the next 3 days, and then of course structure your delta however you see fit. That's slightly bearish on the market, but relatively neutral, and I think that's a good way to look at trading that into Friday. A couple other places where I've done some similar work. In FedEx, I'm looking at the idea that every time this is reverted back up into the 21 after it's had this shift, and it's essentially had 3 times that it's done this, I'm counting this as 1, 2, and then this currently being the 3rd where it is retraced back up into the 21. So I'm looking at a little bit of a pause at these prices, and this is a trade that I've been in for a couple of days. So, I'm taking a little bit of heat on it, but it's the whole concept of what I'm looking for in the big picture. Also, if we come back and look at just kind of where we stand in relation to the current market, this is the whole idea of having, once again, that positive theta, a little bit of a bearish bias, and my peak profit in FedEx will be if we can retrace back down here around 207. It's just the same way of saying I don't necessarily think we're going to fall apart, but I think that's an area we've come back into that we may be able to hold as resistance. A third place to kind of help drive this idea home is looking at Win. Now, in something like Win, I look at this and it had an excellent move up higher today on an upgrade, but if you look at that and think, okay, maybe the buying is a little bit overdone, definitely a point that you could argue, but it's just the idea of setting this up where I'm looking for a little bit of a pullback using the butterfly in this case against the 135 call. So with us closing at 136.37, I definitely do need to see this pull back. But the only thing that we know for sure, or at least a pretty strong assumption, is that tomorrow will come, and if it does, we'll have that positive time decay. If we can pull back a little bit off of those highs, then that should be a nice butterfly as we get into expiration. So that's 3 different ways that I'm looking at generating positive time decay for myself over the course of the monthly expiration. I hope you find that helpful, and we'll see you at the next free video.